Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings and welcome to the technical analysis of the Forex market, daily video research from the ForexPeaceArmy.com. Well, today we will continue to track the euro currency because market has reached some important levels of resistance. Well, and the situation is a bit difficult for analysis currently on the euro market, euro currency. So I think that we should take a closer look on this pair currently. So yesterday we have expected the move to the upside, so that has happened, although we also have expected that market possibly could reach this area of support, because this really strong support, it was my preferable area for the entering on the long side, but market just hit the intraday nearest support area and then thrust to the upside. Well, also take a look at this pattern. This was the butterfly buy pattern, and market has reached 1618 target from this butterfly, from this high to this low. 1618 expansions right here, 138.78. Also, this level coincides with the weekly pivot resistance 1 area. But from the another point of view, take a look at this price action. Yesterday market has taken out the previous highs around 136.56 and close above it. The close, this dash line is 138.60. It's just above the previous highs. Furthermore, market currently stands also above the previous highs. So looks like that this is not the wash and rinse market, and not just intends to take out the highs and then returns back. It's have some pressure, some strength to continue the move to the upside. But from the another point of view, market stands near the area of resistance and also has achieved some intraday intraday logical profit objectives. So I think that if we want to buy, we should wait for some pullback to the downside. If you are a day trader, well, wait the pullback to this area, because this is from the day trading the absolutely suitable area for entering along. This is Fibonacci support 137.12. Also 137 area is the weekly and monthly pivot points. Take a look at this red line. This is a MACD predicted red Napoli indicator. It shows the trend, and the trend will remain bullish for today's trading session till the 137 area. So this area is crucial for the possible continuation of the move up. Of course, market possibly will not show that so deep retracement because it's not oversold or not overbought. It's just hit some targets and reach some area of resistance. So market can show some intraday retracement, but could not achieve this area of support. So this is the risk of the possible current situation on the market. If you want to buy, possibly you will have to drop your time frame to the lowest time frame, to the hourly chart maybe, to find some areas to enter in the market, because market possibly will not reach this area. But from the daily perspective, this is the absolutely good area for the possible entry on the long side. Also take note that yesterday will be the non-farm payrolls release, so this trading day will be very volatile, and depending on the numbers that will be released, everything could happen. But in general, market expects the upside surprise on the non-farm payrolls, because this is historically that in the spring this could be some divergence between the non-farm payrolls data and some other indicators. So this could be really good surprise, and possibly due to this data, market will be able to reach this area. But again, the macro data release is not in our trading plan, so this is not the context that we use for our trading. I just want to warn you that possibly this could lead to some additional volatility on the market. So now let's take a look at the 4-hour chart. On the 4-hour chart we see also the trend is bullish currently, so as daily, by the way. Market has hit a couple of targets. First of all, from this ABC pattern, market has hit 100% expansion, 138.86. The high of this day was 138.90 on the futures quartz. Okay, just above the market, 2 pips high, the 127 expansion on this pattern, A, B, C bottom. Well, we also, I think, can treat it as reached by the market, because 2 pips not a big deal. Okay, but further price action makes me think that market has some power to continue move to the upside, because it's just calling the tight range above the previous highs. Okay, this is the close of yesterday's day. Okay, 138.56. It's the high, previous high that was taken out by the market. Market just stands below this area. The next target to the upside is 1618 expansion from this pattern, ABC bottom, 139.92. So 140 area roughly. Okay, from this pattern the next target 139.75. Also take a look at how market moved to this target. This is first move to the B point, retracement, first move to the D point. So it's a bit bullish sign. Now I think that we can try to enter on the long side of the market, but again today currently I do not see any significant patterns, bullish patterns that could be traded, that could give us some definite areas to enter, where to place stop or something. So this will be, if we will try to enter on the long side, it's just be the entering on the trend. This will be the kind of trend trading. Well, and I think that in this kind of trend trade we should not risk much. So I offer you some possible decision for the position ourselves on the long side of the market. This is hourly chart of the euro currency. Take a look at the same levels. Okay, look at this, market just stands in this tight range above the previous highs, and this is the bullish dynamic pressure is building here. Market established new highs. Okay, move to the upside, but trend, hourly trend is bearish, so price action doesn't confirm, doesn't support this trend shifting. This is the bullish sign. But from the another point of view, as we already said, that market stands just below the some strong area of resistance, and I think that we can expect and count on some pullback to the downside to enter. I think that this area to enter is nice for the possible trading trending deal. Okay, this is the hourly confluence support 138.33, 138.37, and stop could be placed just below 137.99, below the 618 support from the whole swing to the upside. In this trading we risk about the 40 pips. It's not much, but risk reward ratio is very solid. Okay, also take a look again on the 4-hour chart. You can see that trend remains bullish on the 4-hour at 138.12 roughly to this level. This is very close to our possible enter level on this trade. Okay, so that's been said, although the market has hit some targets and reached the area of resistance, just calling above these areas and stands above the previous highs. Also the bullish dynamic pressure is building on the hourly chart, and I think this is the bullish sign of the market, and I think that we can try to possess ourselves on the long side of the market today trading session. But currently I do not see any significant and important patterns and directional signals or something that could add some confidence in the probability of the move in our favor. So I think that we can trade based on the current trend, because it 4-hour trend bullish, daily trend is bullish, so we can try to possess ourselves in the by the trend. And I think that we should not risk much in this kind of trades. So I offer you just risk about the 40 pips with a nice risk reward ratio based on the trend direction, because market really has signs of the strength currently.